Sir, thank you. Senator Reed?
Well, thank you very much, Mr. Chairman, and thank you to the witnesses for appearing today. Mr. Gould, a condition of giving mortgages, of getting a mortgage to a bank typically requires the homeowner to set up an escrow account and pre-fund that account with a year's worth of insurance and property taxes. And laws in at least the Dublin states, including Rhode Island, my state, require banks to pay consumers interest on these balances, and this is real money for my consumers. But the OCC has proposed to exempt the biggest national banks, all national banks literally, from these state laws. And that would impose, I think, a cost on many consumers. It would save money for the banks, but will you conduct an analysis of the impact on consumers in terms of the cost they must pay? It's in the line of affordability.
Well, Senator, thank you very much for the question. As you know, one of the reasons for the OCC's existence, per then Treasury Secretary Salmon Chase and President Lincoln, is to establish nationwide markets. And the hallmark of the OCC is federal preemption. Of course, that is not just a prerogative of national banks, but thanks to legislation passed in 1997 by Congress, it also extends to state banks. And so our focus is ensuring the general principle that states do not have the ability to regulate national banks. That is inconsistent with the whole reason for the OCC, inconsistent with decades and decades and decades of Supreme Court opinion. And that is why we weighed in that manner, sir. And it should come as no surprise to anyone that is the OCC's views. It has long been the OCC's views on that specific issue and beyond, sir.
My question is, have you estimated the cost to consumers? Because one of the goals, I heard a lot about this Tuesday night, was to save Americans from unnecessary costs, and you are imposing a cost on them.
Well, sir, the analysis, I think, is not that simple because I think it also impacts the availability of mortgages in those areas, including in your home state. So the level and degree of state interference in creating nationwide mortgage markets will actually interfere with the availability and the cost of mortgages going forward. So we were very intent on ensuring that there is a nationwide mortgage market.
Interesting, because the law has been on the books in Rhode Island for 50 years, and it is absurd to claim it will affect access to mortgage credit. Mortgages are cheaper in Rhode Island than they are nationwide. According to thebankrate.com, current mortgage rates in Rhode Island are 5.79% for a 30-year fixed rate, and the national average is 6.56%. So the Rhode Island law has no impact. In fact, it has presumably a positive impact on mortgage rates. So that is not, I think, an appropriate response. Let me turn to both Ms. Bowman, Chair Bowman, and Mr. Gould. I think you'd both agree that regulators must penalize banks when they violate the law, and that these violations occur constantly. That's what's surprising, because in the last several months, the Fed has lifted 12 consent decrees against globally systemic important banks. This includes foreign domestic banks that have facilitated mass tax evasion, accounts with Iran, et cetera. And then Consumer Gold, since your confirmation, the OC has lifted 2 actions against systemically important banks and 3 actions against crypto-focused banks. I don't find it plausible that suddenly these banks have become models of acceptability, et cetera. It seems as if you're just weakening the enforcement powers. Madam Bowman?
Well, Senator Reed, thank you for that question. It's important to understand that these enforcement actions and any MRAs have been in place for a number of years, and that we've been working diligently with those institutions to help them understand under what condition we would consider lifting any enforcement action or MRA. And so if we have lifted any particular actions, it's because over a long period of time, those institutions have acted in a way that allowed us to understand that they have mitigated those circumstances. We've verified that with their internal audit, and that has resulted in lifting particular actions.
Well, one consent order was imposed in 2024, that's 18 months ago, and that seems to be a rapid time for most of these large financial institutions to suddenly do the right thing.
Well, I appreciate that, and I'd like to look into that a little bit more. Thank you.
Thank you very much. Thank you. Thank you, Mr. Chairman.
You're welcome.